Hello and welcome to another session of the Let's Get Technical series. I'm Kavita Agrawal, the founder of EXP-Invest, and today we are here to talk about a missed opportunity. In the last few sessions, I have talked about stocks where we have participated in trades where we've booked amazing returns with great XIRR. But today I wanted to discuss with you a very practical scenario where we all find ourselves. That is, we analyze a stock, we identify an opportunity, but we exit it too soon. As a result of that, the beautiful upside that unfolds in the next few weeks, we end up missing it. And once we have missed the upside, there's nothing much to do. Regret is of no use. We can only take lessons from such a trade. So the stock name where I experienced this phenomena is Amara Batteries. Lately, it has been renamed as Amara Mobility and Energy with the whole green energy scenario and renewable energy. The company has decided to rename itself. Let's share my screen and take a look at the trade setup and see the same on the charts before we get into discussion. So this is the stock ideas master sheet, which I use to communicate with all my members. And as you can see, this stock idea of Amara was shared with members on 26th of September at the price of 642 approximately, with a target of 740 and a stop loss of 630. On 28th October, the stop loss of 630 was set. Now, clearly, there was some issue with the way we set the stop loss. Let's now move to the chart and visualize the same setup on the screen and see how we can make it better. So this is the chart. This is the 75-minute time frame, and this is where we entered the stock for the first time. 25th of September, around the level of 642, and this is where we got stopped out. Now let's analyze what happened, what went wrong, what we could have done better to avoid this. So first thing first, let's take a look at the weekly time frame. Now, when I entered on the weekly time frame, what I could see clearly that the stock was taking resistance at the 200 EMA. The blue line that you're seeing is the 200 EMA. This, first of all, should have been my signal to wait, not get impatient to enter the stock, right? Another noticeable so before the stock, if you see, like before my entry point, what I notice, and see all of these points that I'm sharing with you, right? These are all in hindsight. Now, you might think that what is the point of observing this in hindsight? The stock has already been missed. The upside of doing past trade analysis and identifying what we missed to see previously is that we can see it now and we can do better next time. Because the fact that the stock was taking resistance at the 200 EMA here and fell down is not something that happened for the first time, and this was also not the last time. This is going to happen again. And if I have the information that the stock taking resistance at 200 EMA on the weekly time frame has a tendency to take some correction, I will be more mindful, and instead of buying at resistance, I will buy at support. So one thing that I can clearly notice is the resistance from 200 EMA. Okay, so we will build our notes here. I'm going to make this a little bit bigger. So the first thing first, on the weekly time frame, we saw that there was resistance from 200 EMA when we entered. What is the second thing we notice? Again, on the same weekly time frame, I can also see that this little upside that happened, which made me believe that the upside which was unfolding, so the stock is already in bull trend. Okay, this upside, I wanted to participate in the next leg of the upside, but my timing was wrong. And I am asking my charts, is there any indication which could have told me that my timing was wrong? The answer that I'm getting back is yes. First, this big downside that happened clearly happened on very strong volumes, which should have told me that this downtrend is quite strong. So when the stock again went up from the bottom, it took support at the 50 EMA, the yellow line, and it went up. This upside, if you noticed, also happened against pretty poor volumes. Means the volume, the 20-day average volume was way below the 100-day average volume, which means that the upside did not see participation. So another clear note that I can make is volume was weak in weekly, right? Let's move on to the daily time frame. On the daily time frame, again, the volume story that we've seen is enunciated even in much more details. Like, look here, the volume really increased when the price went up, and the volume then only declined until the price was down. So up to here, the volume was pretty weak, right? The volume started to pick up again when the price went into consolidation. This is not a good sign. What I could have done was, I could clearly see that this is a very important support zone, right? If I had set a GTT order to buy at the nearest support zone, given that the upside that was unfolding did not have much strength, I would have made a perfect entry. But why did I set my stop loss at this level? So what went wrong with my stop loss setting? I have a rule where I don't want to expose my capital to more than 5% stop loss. So even though in this situation, my stop loss should ideally have been below the most recent low, which also would have gotten triggered, by the way. So my ideal stop loss should have been this level. Basically, if I am trying to capture or mirror this leg of upside, I need to look at a support which provides as a base for the same upside, not look for a support at a place where I'll just adjust this a little bit. So I shouldn't be looking for a support within the internal trend. So if you attended the Monday's session, I explained a very important concept of fractalism, basically waves inside waves. So if I have decided that I want to play a particular wave, see, if I have decided that I want to play this wave, then I cannot set a stop loss on the basis of one time frame or one wavelength lower. That is a mistake that I did here. So I am trying to play, say, a intermediate level wave, and I'm setting the stop loss on the basis of a minor wave. That is the reason why I got stopped out pretty premature. Now, if I had paid attention only to the intermediate wave and set the stop loss here, there again, I would have experienced an issue with this particular entry point. Why? Because the stop loss extent, the stop loss on the single position would have been almost 7.5%. Now, this is 2.5% higher than my maximum plausible target that I like to maintain on a position. So what is the turnaround for this? One, we have already noticed that the weekly time frame gave us two signals, which should have been enough to tell us that hold your horses, don't get into the stock right now. Another thing is that once the stock came down to this yellow line, blue line, this blue line is basically the 200-day EMA of the daily time frame. So on the daily time frame, we could have waited for the 200 EMA to make a fresh position, or the 500 EMA. You can see there is a crossover happening between the 200 and the 500 EMA, right? So this would have made a very good entry point, not the crossover, but when the stock came down to take support. See, when a stock's underlying trend is bullish, okay, first identify the time frame that you're trying to play, or the wavelength that you're trying to play. And after you've identified identify the most suitable support level where you can forge an entry. Once you've identified that, set an alert or a GTT buy order and go ahead with it. So in this trade setup, even though my analysis that the stock is an underlying bull trend, is taking a correction and is going to resume the trend very soon, was correct, just because I set the stop loss on the basis of one wavelength lower and made an entry in a premature manner without paying due attention to the volume analysis and to the wave count, I would say I missed a fantastic opportunity. And what is the opportunity that I missed? Even if I count from the wrong entry point to today's price, the stock is up 26%. 27% almost. If I had made the entry where, if I am in this situation again, where I find myself looking at a stock where the underlying trend on the daily or 75-minute time frame was bullish and the stock is in correction, and today if I have to buy, I'm going to set a GTT buy order rather than buying it on spot, or 25% of my position here, set a buy order a standing buy order using GTT on Zerodha to buy another tranche here, maybe another tranche near this support, and another final tranche here. So I have started using this style of accumulation where I allocate my capital in 3 or maybe 4, sometimes even 5 tranches, especially in a stock where my probable stop loss is going beyond 5%. Because like I say, in any one setup, I never want to risk more than 5% of my capital. So if I had made the entry in Amraja Batteries or Amraja Mobility and Energy here, then my upside today would have been nearly 35%. And in how many days would that have happened? In just 68 days, less than 70 days. I mean, phenomenal, right? So this opportunity got missed, but no harm, no foul. There is another stock where I did capture a beautiful opportunity, and that is National Aluminium. Now in this stock, as you can see, I made 2 entries. First entry was made near this consolidation zone right here on 24th November. Wait, was it 24th? No, that's 36. Okay, so I entered first here on 28th November, then I exited the stock on 8th of November. In that trade, I captured around 5-6%. But my broad analysis suggested that this stock has more upside left, so immediately I re-entered again. Then around 22nd of December, I added more to this position, and today I got stopped out. So if you see from the day of entry up to today, on the basis of the past trade analysis that I just showed you, I made this entry, and in 23 days, I managed to capture 38% profits, and the investment in this stock was more than 5 lakhs. So I bought 6,000 stocks at the price of 99.5, and today I was able to book the profit. So the observations that I've just showed you on the stock of Amraja Battery, so the observations that I've just showed you on the stock of Amraja Battery and the execution done on the chart of National Aluminium from the lessons learned from Amraja Battery is what, number one, helped me learn my lessons, become a better trader, and convert those lessons to booked profits. So in this session, I also want to tell you about a hack which will help you identify such scenarios where you've done the analysis, identified the opportunity, but maybe due to poor practice, exited early. See, there is no rule which says that if you've exited early, you can't enter back the stock. We will be very willing to enter back the stock if we know that the stock has triggered the correct, if we know that the stock has upside and it has started to move after our exit. So I went through stages or iterations, and today I feel I reached a stage where I know I have a system now which will help me identify missed opportunities that are slipping out of my fingers. So initially I used to set alerts, but the problem was that suppose if I exited a stock here and if I set the alert at a little bit higher, say 98.5, right? Now when I set it at 98.5 and the alert gets triggered, I come to the chart, I look at it, but I think the chart is not looking so bullish. Let me come back to it. There's a good chance that I might not come back to it. So the stock gets dropped from my radar. So I need something which will help me keep the stock on my radar, keep it in front of my eyes. So I devised something called okay, it doesn't have a name, but basically I added a new column to my trade tracker, right? In that column, I started calculating the last traded price, that is the current market price, right? Divided by the exit price. So the column where I enter my sold date, I link that column and I set it up. Now, because I am a swing trader, that means I participate in a stock multiple times. I buy, sell, buy, sell, buy, sell. So if I run a pivot on the LTP divided by exit, then it will give me multiple numbers from multiple stocks depending upon the multiple exits that I've done in the past say 1 year, right? I don't want that. So in order to overcome that, you can add another formula to there where you're only taking the exit price of the last date. So there is a massive formula for that on Google Sheet. See, in theory, now that I'm saying it out to you, I'm sure it makes no sense. But if you need help with this, join my Telegram channel. I will be sharing a document giving the details of this. In addition to this, I also run a training class for advanced technical analysis for swing traders. Every Sunday, I take a 2-hour class for the participants. Now, this class is broken down into 24 sessions. And over 24 sessions, I share my knowledge, my methods, my insights with people who are very passionate about swing trading. If you're interested in that, information about that will be available on my Telegram channel. So if you want to join my Telegram channel, here's how you can do it. Go to Telegram and search Trade with Kavita. The first channel that comes up, click it, join it. So right now there are around 1900 members. Just beware that there are some fake channels also running in my name. So make sure that you're joining the correct one. This is the link, Trade with Kavita. I have dropped the link in the comments for you to join from. So if you are interested to know more about the advanced technical analysis trading program, or if you just want to trade with me, basically, if you want to get into a partnership with me where you're doing swing trading on the basis of my analysis, then you can go on the Gap Up platform right now. The link has been dropped by the ET moderator. Click on the link. When you subscribe through that link, I will be sharing with you stocks which are at a good price, at a good time to buy. I will tell you what stop loss target to maintain, how to trail the stop loss. So every time the stock has moved enough and warrants a stop loss trail, I will tell you about it. So you can go and implement that, right? So that's pretty much it. That's pretty much all I had to discuss with you. Now, if you have questions for me related to this discussion that I just had, or if you have stocks in your own portfolio where you're experiencing losses, please drop the name of the stock and the cost price, and I will take a look at the charts and help you out resolve those. I will help you out with key levels of stop loss and target on your holdings. Thank you, Mr. Jalan. Thank you for your kindness. And one reminder, every day at the end of the market, I share my Nifty commentary in my Telegram channel, which will give you a good sense of what direction is expected in the market. Key resistance, key support levels are also mentioned. Like last few days, I've been warning that there is a negative range shift happening in 3-minute time frame, 15-minute time frame, which suggests that a small correction can occur in the market. And last 2-3 days, we are seeing that the market has been in correction. So knowing this mood of the market or subtle changes which can lead to change in the direction of price in the market can help you plan your trades a lot better. So Mundra Reddy ji is asking for, so what system to use, track, how to know the system? So Jalan ji, it does not have to be anything complicated. You can use a simple Google Sheet, okay? Why a Google Sheet? Because in Google Sheet, you can use there are formulas which you can use to pull live market prices. There might be 10-15 minutes lag, but that's fine. As a swing trader and long-term investor especially, if you're an intraday trader, then I don't think there is any system that can help you become consistent. I personally, I hate intraday or options trading. However, if you join my elite plan of the Trade Together program, then I will give you a trade tracker which I have developed for my members, and you can use that to do not just your trade tracking but also your past trade analysis. Let's take a look at Imami Limited for one of our guest audience. So today what I can see is that Imami Limited has given a bit of a correction, and this actually we had an active recommendation in this stock. Let me remove these lines. Today we had an active recommendation which triggered stop loss. Okay. So the stock recommendation, sorry, just hold on. I deleted something that I was not supposed to delete. There you go. So I like to mark my executions, my recommendations, my active ideas, everything on the charts, because I like visualizing my data and my activities here. So I gave the recommendation to my members on the 30th of October, and you can see that from 30th to October until 28th of December, that is over 60 days, the stock did nothing. It was just in sideways consolidation, very frustrating. But that is very normal for stocks to do. And then within 3 days, the stock went up 5%. Now, see, Imami is again what we just discussed in Amraja, right? Strong uptrend is in place, but the stock also has been in correction, and during this correction, if you notice, the volume has been pretty weak, and now a uptrend has started. But this 15% upside that unfolded, right? I didn't want to miss out on all of the upside, so I set a stop loss here, which today got triggered. However, that being said, I still think that this leg of rally, okay, now we are not talking about this big leg of rally, right? We are talking about this small leg of rally. I think this small leg of rally can still unfold into another leg. So today the stop loss at 548 got triggered. I will wait for the stock to come down a little bit lower, maybe 5-6% more. Why? Because there is this 200 EMA of the 75-minute time frame that I'm interested in. So if the stock comes here, this is where I'm going to re-enter. Or if the stock starts to go up and sustains above the level of 567, then also I will give my members a recommendation to go long on this. So see, why did I choose this level of 567? Because in this downside, this acted as a resistance. So if the stock can sustain above that, then it will be a good idea to make a long entry. However, if you are currently holding Imami Limited and you have not used the stop loss like I did, and you're still holding on to the position, then you can use the stop loss. See, I am expecting the stock to come down to 514. So if you want to continue holding, and if you're okay with 5-6% downside, then maybe extend that a little bit more and set your stop loss at the base of this very upside near the level of 495. It's a little bit of a big stop loss. As you can see, it's nearly 9%. So I personally wouldn't be comfortable. But if you have, say, a position which you've been holding for more than almost for a year now, then you can use this bigger stop loss of 491. Okay, Suman is asking for KNR construction. Let's take a look at KNR constructions. All right, so KNR construction, what I can see is that this upside happened against great volumes. This downside is happening against weak volumes. The stock has taken support at the 500 EMA, which is kind of becoming its base for upsides. But I want to see the stock take a little bit more support there. So what I would suggest is, don't see, because the overall market sentiment has become a little negative, so don't create a down, like a lump sum position. Use GTT orders. So how will you go about it? Right now, set a AMO order for tomorrow morning. Then set another buy GTT at 255. Then set another buy GTT at 251. And finally, you also need to set your stop loss. So for your stop loss, you use this level. So actually, so just below your third GTT, right? 248, use your stop loss. So I honestly don't expect this 251 to get triggered, but just in case there is a spike, because if you notice, if you just do an objective analysis, you will see that near the end, the stock does have a tendency to give a spike. Right? So that is what we are relying on. That's why we have set 3 GTT orders. And then you can hold on to this position and expect at least this trend line to get tested, which gives you a target of 297. So even from right now, the risk reward ratio is quite attractive. It's more than 3. So you can definitely go forward with it. And if you are holding on to the position, and if you've already allocated around 8% to the stock, then don't add more to your position, because you don't want to expose more than 8 to 10% of stock of your total capital in this stock. So use the stop loss at the level of 249. So that's for you, Suman. We will move on to Swati ji's request for Hind Unilever. I remember I analyzed Hindustan Unilever yesterday also. All right, let's see Hindustan Unilever. So I am personally not very bullish on Hindustan Unilever because what I can see is that first, when this downside happened, it happened on strong volumes. Second, when this upside unfolded, that happened against declining volumes. So this does not make me comfortable, and I would not recommend a long position here. In fact, if you have an existing position, I would recommend you to exit it right now. Okay, let me also share my screen so that you can see the analysis. All right, let's take a look at some more comments before I go. No audio. No, I think the audio must be fine. Nobody else has complained about the audio so far. All right, let's see. We have Mr. Ashish asking for RVNL. So Mr. Ashish, we only take one stock per member because of the volumes. So we'll take a look at RVNL. For the other stocks, you can connect with me on Telegram and I'll be happy to help. So RVNL, I am bullish on RVNL, even though my position got stopped out recently. I'm just waiting for a better entry point. So RVNL price of 175. So you are in profit, right? I would suggest that you maintain a stop loss at cost for your position and continue holding. The stock, see, in this stock, right, it's a railway sector right now is very, very strong. So the first target you can assume for the stock to be at the level of 197. And then the second target to be somewhere here at the level of 230. Fresh entry is not recommended right now, but in this correction, if the stock happens to come near the level of 173, then not 173, sorry, 175, 176, then you can expect to make fresh entry. All right, RVNL, I have BEL with the price 183. Can I hold or sell for Ashish G? Let's take a look at BEL. All right, BEL, how much did you say it is for? BEL 183. So you just bought it basically. Very strong rally is unfolding. You can definitely hold on to it. Just maintain a stop loss right here at the level of 177.5 and you'll be good. No fresh entries recommended. I request everybody that if you're enjoying this session and if you feel what I'm sharing is helpful to you, please don't forget to give a thumbs up to this live stream. So Gauravji, you're going to have to be more specific than sugar stocks if you want me to analyze it for you. And right now, Amraja is not looking good for a fresh entry tomorrow. Sanjay ji is asking right entry point in rate gain travel tech. Let's see, rate gain travel tech. Very strong rallies unfolding. 100 EMA support just happened, but I personally would like to see the stock take support at the level of at the 200 EMA of the 75-minute time frame. Why? Because the stock simply has a tendency to do that. So that is where I would enter, because see, the last 3 times only, if you see, the stock took support, went up 20%, took support, went up 24%, took support, again went up 16-17%. So if you enter right now, the stock is almost away, like 6% away from 200 EMA of 75-minute time frame. You are basically cutting short your upside by a significant number. So also on the 75-minute time frame, there is negative divergence, and the volume is right now not looking very good. So I would like to see the stock take a little bit more support before fresh entry. What were the indicators? Can you please repeat? I missed it. Also, how should we set the alerts? So if you're using TradingView, see, I use very simple indicators. Okay, I focus more on price and momentum. So there is RSI on 75. All my time frames have RSI and moving averages. So on the larger time frames like daily and 75, I keep exponential moving averages like 50, 100, 200 and 500 active, and I superimpose them on the smaller time frames. And on the smaller time frames, I only focus on 200 and 500 EMA or 1000 and 2500 EMA also. The RSI is set at a period of 25 for 75 and 15, and for the daily time frame, the RSI is set at a period of 20. I know I went through it very fast, but it's okay. You can rewatch this video on YouTube and, you know, rewatch it multiple times. Excuse me. So Rajan Pandeyji, the Telegram channel link has been dropped in the comment already. So you can please click that and join in. Let me just drop the link again. Okay. Let's move on with the next one. VIP. So you're holding VIP since 700. It's been a while since I looked at VIP. That didn't change. I think I need to set NSE and VIP Industries. Yeah. All right. Ooh, nice consolidation. I like a good consolidation with a huge spike of volume on the upside. Awesome. This is looking very good. See, VIP, if we look at the monthly time frame or the weekly time frame, right? So this stock has a tendency to give massive upsides, but right now it is in bull trend. See, sometimes you will see that you look at a chart on 75-minute time frame and you can't understand the wave. So you need to then look at a larger time frame. Okay, something just weird happened and my chart changed. Yeah, so here now that I'm looking at the weekly chart of VIP Industries, I can see clearer trends, but I'm not liking the trend line so much. So I think I'm going to draw fresh ones. So these two peaks look important. So that's going to be the maiden. And then we're going to clone that and place it at other important support and resistance zones. And what I can see is that I pretty much ended up drawing the same trend lines, but it's fine. Time to time, I keep refreshing my trend lines also. All right, so what I can see is that this 200 EMA, I feel VIP is going to come and test it because the stock is clearly in a very strong bull trend. And when a stock is unfolding in a correction or a consolidation, it has a tendency to take support on the 200 EMA. Now, which 200 EMA is it going to take support on depends on which wavelength or which time frame the said trend is unfolding. So in VIP industry, the trend that is unfolding is very easily visible on the weekly time frame without, you know, having to squeeze the charts too much. Like in the daily time frame, it looks like a sideways consolidation, right? So the 200 EMA is very important for the weekly time frame, and there is also this green zone that is passing by here. So I would ideally want to create my positions in this range between 550 to 521. Now, for someone who might be holding a long-term position in this stock, you can set a stop loss at the level of 500 and continue to hold. Now, as far as fresh entry is recommended, you can continue, you can see, even now you can start accumulating your position in 25% tranches like I showed you, because on the 75-minute time frame, a very clear-cut positive divergence and RSI positive range shift has already occurred. Though because of the negative sentiment unfolding in the market, I wouldn't trust this right now because see, multiple times in the past the stock has shown this but did not give a significant upside. Like it's giving up like 18% upside in 90 days and then 20%. See, this one is good, but overall if you see this entire upside is like just 24% in 174 days. So as a swing trader, it's a little less. So better to approach the stock from a longer time frame, like be prepared to hold the stock for 6 months to 1 year, and use this entire range right now at 588 all the way to 500. You use that to accumulate your position, but if 500 is breached, then you exit the position. Wow, lots of stock requests. I don't think I'll be able to cover all of them. We'll take one more because, okay, we might be able to take two more. So let's see. We'll take a look at HCL for Mr. Avdesh Kumar. I hope Avdesh is still here because he asked for it a long time back. Okay, HCL Tech. Strong, very strong rally is unfolding here. And the fresh entry is definitely not recommended because see, the stock is already gotten away from us and it is creating, I mean, it's not showing anything very negative per se, but it also not showing something which will compel me to make a fresh entry right now. Moreover, the volume on the upside has been, slightly on the weakish side, and on the 75 and 15-minute time frame is looking clearly very weak versus the 75-minute time frame. So fresh entry is not recommended, but if you have an existing position, you should maintain a stop loss near the level of 1395. All right. Ashish Gupta ji is asking, please check my comment and update the same if you can. I can't see your comment, Ashish ji. Good time to enter HDFC Bank for Mr. Inder. HDFC Bank. All right, so some bit of correction has occurred, around 2.5% kind of correction has occurred, but now I don't think it's a good time to enter HDFC Bank. I talk about banks a lot in these sessions, and usually what I say is don't go for banks because I don't like trading banks personally. And right now, even though the market is unfolding in a bull trend, my participation in banks has been quite muted. I've been more interested in sectors like energy sector, IT sector, pharma and healthcare sector. But banking sector, there was a point of time when I was quite active in participating and trading in this, but lately I feel the quality of the uptrend that's been unfolding is not, it does not meet my checklist. So now that this last leg of rally also that unfolded in HDFC, right, I don't like the volume. It's too sporadic, and it's not signaling a very healthy uptrend at this point of time. So fresh entry is absolutely out of question, but HDFC, I think it can retrace further 5%. And if you have a short-term position, I would suggest you exit it. If you want to make a fresh position, then I would suggest you consider it when the stock is back at 1593. So with that, I have come to the end of this session. Thank you so much for joining and giving me your time. I will be back on Friday at 5 p.m. with the Market Outlook series, where we will discuss in great details Nifty, Bank Nifty, and the intersector chart analysis. In the intersector chart analysis, I talked to you about which sectors are expected to come into momentum and which sectors are expected to get out of momentum so that you can churn your capital appropriately. So if you're interested, join my Telegram channel so you don't miss that session. And thank you so much for giving me your time. I hope you had a great start to this new year, and I wish you a very, very happy New Year 2024. Namaste.